Good afternoon, everyone. This is T3 Live Editor-in-Chief John Darcy here to bring you the daily recap. So I feel like the fact that I do videos on Friday is sort of leads to the fact that on a lot of days I come in here and I tell you it was a quiet day, an OPEX Friday, which is exactly what we had today. You know, I talked about this morning in the late morning call the potential for this type of day, as I talk about the potential for this type of day on a lot of Friday morning videos that I do. And today it definitely played out that way as the S&P opened slightly higher, but was relatively quiet during the session and traded a little bit lower to finish around the flat line, as did most other U.S. indices, the NASDAQ and the Dow, pretty much on par with the S&P. So overall, an OPEX Friday, a quiet day, not unexpected. You saw some movement in some individual stocks, but not a whole lot. I think maybe some people were out watching the USA-Canada hockey game, or maybe they were hungover from watching the UNC Tar Heels with their great victory over Duke last night. I don't know. But just a couple ideas there. But I'll go ahead and take a look at the chart of the spider so you can see it for yourself. As we talked about several times, on Wednesday we had a pretty loud red dog reversal, an outside bearish reversal that sometimes can lead to more downside. But the fact that we're in a strong macro uptrend, a strong intermediate term uptrend, and in a strong short term uptrend since this snapback started off the 100-day here, you always have to be cautious about piling into shorts just because of one day of a red dog reversal. And so yesterday we had a really nice bounce back from that reversal to erase most of those losses, or all of those losses. And then today we opened higher, pushed higher initially, but didn't really have any more juice on a quiet Friday. So that's not unhealthy. I think it's healthy overall to see the market hold higher today. But the real key will be next week, now with OPEX out of the way, whether or not we can continue higher and make that move above S&P all-time highs, above 1850, and get some momentum, get some follow-through, and maybe really start a rally in 2014 as opposed to just some range-bound, volatile type trading. But in terms of individual names, like I talked about, there was a little bit of movement in individual names, but not what we've grown accustomed to in 2014. Even during quiet days for the indices, we have seen a lot of stock movement, but relatively subdued today. We talked a lot about in the last 2 days about the social media space after the Facebook WhatsApp deal, everybody jockeying to see what that means not only for Facebook, but what it means for the rest of the social media sector, what it means for social media valuations and stuff like that. But the moves we saw yesterday higher in a lot of those names, they gave back some of those gains from yesterday today with losses. You take a look at the chart of Facebook. Overall, still a really healthy chart. Nothing too alarming here in Facebook at all today, but you didn't see the upside continuation after it briefly eclipsed the $70 psychological area yesterday. You saw it fill back a little bit and give back some of those gains, but overall holding above the 8-day, holding above the 21-day, well above the 21-day. Extremely healthy chart here, and one that with a little bit of sideways consolidation to digest this recent rally, to digest the WhatsApp news. I think this is one that, in my opinion, will continue higher, but might need a little bit of time. Twitter, on the other hand, is coming under some scrutiny here. Obviously, it had the very weak earnings report with the big 20% gap down. It has filled about half the gap, but you really want to fill more than half the gap if you really want to prove that you've put that big gap down and that weakness behind you. And that's not what we saw with Twitter. We saw it come back into the 21-day moving average and get rejected with a big down day on Wednesday. A decent bounce yesterday of about 2%, but then today gave back a lot of those gains. And like I said, just still has a lot to prove for Twitter. People have made a lot about the fact that WhatsApp, the purchase price around $19 billion, was more than the value of the Twitter IPO. And then some people thought that was a little bit ridiculous. But then you dig deeper into it, WhatsApp actually has more monthly active users than Twitter. It has some more applications, potential uses in mobile e-commerce and mobile payments and stuff like that, more so than maybe Twitter has. So overall, I don't think that's too far-fetched, and I think people are noticing a lot of the competitors that are out there, not only the Facebooks of the world, but these other services that could come to replace Twitter if they don't execute as well as some of these other social media sites have done. So they're coming under a lot of scrutiny. Twitter, I think that you definitely need to give it a little bit of time, but if it can hold higher, sort of hold this recent pivot, you go back to the chart, the area to watch on a short-term basis will be yesterday's low of 54.65. So that'll be the short-term level to watch, and if we breach that, this $50 area will obviously be a huge level. If we were to get down there, that would be a big if, because that would be a big retracement. But if it comes down and tests that level, that will be a big battleground to see what the next move for Twitter is, because if it doesn't hold that, you could see it back down in the $40 area. There's no real support until there. until I guess you could say the 45 area. So you could see it in the 40s if things don't hold up better in their current position. And then take a look at LinkedIn while we're on the social media space. Overall, just an out-of-play stock right now, one of the weaker ones, below all of its moving averages, 8, 21, 200, 50, 100, as you can see there. So this is one that's definitely out of play. That if you want to be one of those that's looking to short bounces, maybe this is one of the ones that you look at. On a monthly chart, you can see a downtrend that's occurred over the last 6 to 8 months. So like I said, if you want to be shorting bounces, maybe this is a candidate. And then it's not in the social media sector, but BlackBerry got some attention on that Facebook WhatsApp news because of the fact that the BlackBerry valuation is only $5 billion. They do have BBM. They're trying to make something of that, salvage that instant messaging platform that's similar to WhatsApp. The fact that the whole company's valued at about a quarter of what WhatsApp was purchased by Facebook. People thought maybe you get a little bit of attention with the 20% short float, might squeeze a little bit, but so far not a whole lot of interest. This is on the daily chart here, you can see this descending triangle pattern that we highlighted. It's still, the pattern hasn't broken yet. It's still holding above the floor, but you'd like to see it break back above that descending triangle pattern that's in place. This is the weekly chart. I was looking at it, I was like, that doesn't look right. Here's the daily chart. You can look at it a little bit more easily. We'd like to see it get above that downtrend line to start a potential squeeze up to the $11 area. Maybe it happens next week now with OPEX out of the way, who knows. Something to keep an eye on still until that pattern breaks below 9 or above the 960, 950 area as that pattern continues to get tighter. But social media was a little bit weak today, but they didn't tell Yelp. Yelp isn't exactly social media. It's one of these Web 2.0 type stocks, and I think somebody told it that it got listed on the Off the Charts newsletter, so it knew that it wasn't allowed to go down. Obviously, I'm being facetious, but Yelp holding up well, and one that we have on Off the Charts that I really like. Really nice upper level flag pattern. Exactly what you like to see after a strong earnings report. Gap and go to the upside. 2 or 3 week consolidation here to allow the short-term moving averages to play catch up, and looks like it's trying to perk above this slightly descending bull flag pattern that we highlighted. So you'd like to see a little bit more momentum above a previous day's high, but all in due time. Nice rest here for Yelp. One that definitely still looks very constructive and could head towards the $100 area, in my opinion. Biotech stocks also remain very strong. It seems like every day you'll flip through charts or you'll be on Twitter and you'll see people calling out a biotech stock that goes up 10, 20, 30, 40%. Obviously, with drug approvals and things like that, biotech stocks are ripe for both big gains and big losses at times, depending on the way the ruling goes. But it seems like most of the time recently, the rulings have been favorable, and there's been a lot of stocks that have been absolutely exploding. And that continued today, and it lifted the biotech ETF. First, we'll take a look at the IBB, which is the ETF. Just continues to stair step higher. It seems like when one of these stocks wants to take a rest, another one emerges and goes up a bunch, and one of the big names breaks out, and this thing just continues higher. All of February, it's been a really strong uptrend pretty much. And BIIB is one of the leaders, one of the largest components of the IBB ETF. And today, really nice extension. I've talked about it in several videos I've done in the last few weeks about how this, to me, is the one that you should be focusing on in the group. It's not one of the smaller speculative type names that you really have to worry about, it hinging on 1 or 2 drug approvals. Yes, obviously drug approval is very important here, but it's got a bigger portfolio of drugs, got a much bigger earning potential than some of these smaller guys, and continues to show tremendous relative strength. Really nice extension today, finished up several percent. Gilead, one that's slightly weaker, but another one that I really like, holding above its 8-day moving average here. Wasn't quite ready to break out today, but it's one that's also on our Off the Charts newsletter. Another freebie for you there that I think could break out. If I can get above that pivot from, I guess that's Tuesday, the pivot high here is 83.98. If I can get above there, get into the 84 and change area, I think it could definitely explode higher. But on an OPEX Friday, maybe just didn't have too much energy. Alexion, one I talked about in today's morning call, one that I've talked about, that triumvirate of bigger names in the pharma biotech group. We saw a really nice calculated pull-in, 3-4 day pull-in this morning into the 8-day moving average. Sometimes, yes, maybe psychologically you'd like to get a deeper pull-in into the 21-day moving average, perhaps, but on a really strong stock, a lot of the times the 8-day moving average is what's going to really support price, and that's what you're really going to have to use to buy pullbacks, and that's what we saw today in Alexion. Closed a little bit off its highs, not exactly what you'd like to see, but overall, I think this one is poised, in my opinion, for another breakout above 185 and one that should be at the front of your queue in terms of the biotech names that you look at. And some of the names I talked about, there's just names across the board that continue to have big moves. ACAD was one today, finished up around 18% or so last time I checked near the close. ISIS, finished up around 15%. INO up around 10%. INO 10% move, so just more really big moves. Sometimes they're smaller names, sometimes they're bigger names. You know, Acadia is definitely a well-established biotech pharma name, so just that sector overall continues to provide opportunities. You know, maybe you're not going to get that lottery ticket where you catch a 40% move while you're in options or something like that. I definitely wouldn't encourage you to bank on situations like that, but look at the bigger names, the BIIBs, the Gileads, the Alexions, and some other names that are big components in the IBB ETF, and look to play those. I think the whole sector is in a bull market right now. Some people talk about, you know, biotechs being in a bubble. I think people throw around that word way too much, and I definitely don't think biotech is in a bubble. I think these big biotech companies have huge earnings potential, and we're just seeing a really nice bull market there as research progresses. And now I'll just go through a host of names that, as I was going through charts in the afternoon, like I said, it was a somewhat quiet day, not only in indices but also stock-specific wise. But we did see some moves, and I'm just going to go through some stocks that caught my eye as I went through charts this afternoon getting ready for this video. A few names that you've definitely heard about. Microsoft, I would assume you've heard of Microsoft. Really nice move early in the day today, but just typical OPEX Friday type situation where it just fades in the afternoon, closes off its highs, but I wouldn't put too much stock in the fact that it did fade. Still closed around the $38 area, which was the breakout we were looking for. I think if the market can hold up next week, I think this is poised to potentially get more upside, challenge that $39 pivot high there, and then potentially extend beyond that. In Scott's 2014 predictions, we talked about looking for some sort of reversal on Microsoft down in the $35 area. It happened pretty much like clockwork, exactly what we talked about. We laid it out in that outlook report that we did, and we've seen a really nice bounce from there. As I've talked about many times before, pays a nice dividend, potential for earnings growth because of the fact that they have tons of cash on hand, can make some strategic acquisitions. You have Steve Ballmer stepping down as the CEO. You have this new guy stepping in. He's an internal candidate, but people seem to be really excited about him. So a lot of positive changes going on at Microsoft. They also own Skype, which is, you know, spitting in a barrel in terms of their market cap, but instant messaging platforms and social messaging platforms getting some attention. Skype is a big competitor of WhatsApp, could bring some positive attention to Microsoft. So a lot of different reasons, in my opinion, to like Microsoft besides a strong technical picture as well, which is the basis of most of what we do here at T3. But it's great when you have a lot of different stories align, and that's what I see in Microsoft, and I think you could see it continue higher. GLW, Corning. This is one I own in long-term accounts, and I absolutely love. You can go back and look at a longer-term chart. On a monthly, you see that Corning's been around a while. It's an established company. It's had its highs and its lows, corrected sharply during the financial crisis, as a lot of companies did, but then bounced back very swiftly, and then has been trying to get back in the upper levels of this chart, this monthly chart. But you take a look at the daily chart, and what we've seen is, let me go to weekly first and just point a couple things out. Technically, one of the reasons I really liked it back in early 2013, late 2012, is you had a nice lower level base to trade out of. It wasn't a leading stock, but it's one that has a very good reputation for, you know, corporate governance, and they look to buy back shares, and they look to increase their dividend whenever possible. I love those types of companies that do well by their investors. And out of this lower level base, it broke out and retested it to give you a chance to get in if you weren't in for the initial move. And then has really exploded as its relationship with Samsung has developed. This big gap up you see here, Samsung announced that they were buying out a partnership agreement that they had with Corning, and are actually taking a big stake in the company. So they seem to be banking on Corning to be their display provider going forward. Corning provides Gorilla Glass is their big growth business. They provide LCD displays for screens and things like that, but Gorilla Glass are the materials that you see used on your screens in smartphones. The iPhone uses a Corning Gorilla Glass display, all the Samsung phones, and it seems to be the most viable solution going forward. There's been some talk that Apple could use a sapphire display. Sapphire is a material that's used on the lens of your iPhone camera. There was talk they might try to use it on the whole screen. It's a very durable material, but for now, the news is they're sticking with Corning for the iPhone 6. That's helped to boost it. But you go back and take a look at the chart after some anecdotal words there about the company. Like I said, this big gap up was on that Samsung news. held most of the gap, continued higher. Gap down on earnings, not the strongest earnings report in the world, but it's been really nice to see Corning bounce back impressively from that report with a really strong multi-day bounce back. And then what we've seen that makes it attractive to me at these levels again is that we've seen a multi-day consolidation here at upper levels. You have the 8-day moving average once again providing support, as well as the 21-day, and a nice tight consolidation here at multi-year 52-week highs for another potential push. And I think this could definitely get a move above those highs and get some more momentum after this nice rest, and you could see it perhaps closer to $20 here in the near future. Under Armour, another one that we've talked about. We like to buy strong stocks to build upper level bases. This one had a little bit of a shakeout on news that the U.S. Olympic speed skaters, they were wearing Under Armour suits and it potentially slowed them down. I think that was much ado about nothing. That's the bar you saw here these 2 days. It sort of shook people out that were looking to buy in that upper level base, and then today exploded higher as they actually announced another 8-year partnership for U.S. speed skating with Under Armour. So they're, I guess they don't hate Under Armour too much, and they don't think that Under Armour can't fix whatever problems there potentially were with the suits. So positive news there for Under Armour, triggered a nice 5% or so breakout. And then elsewhere in the space, other strong brands. If you're talking about building a portfolio, I love the idea of holding strong brands in that portfolio. Under Armour is a strong and increasingly strong brand. Nike is another one that, consumer stocks did get hit hard as tapering started and the economy is still faltering and everything like that. But Nike did hold its 200-day moving average, as you can see here, and it staged a really impressive bounce during February, extended higher today. Maybe in the short term a little bit hard to buy after this really strong snapback of almost 10%. But on pullbacks perhaps into the 21-day, if we get that, or even the 8-day, I think Nike is an attractive one to buy. Really nice growth story in the sports apparel and all that, all more technology stuff they're trying to do. Just an attractive company to me to own, to buy on dips. And we got a really nice opportunity beginning of February to do that. Hopefully we get another one. And then Lulu is an interesting case to me as well. Technically, the story is not terribly strong here, but it's getting a little bit better. We talked about looking for a move in Lulu out of this descending channel, I guess you could call it, since the gap and go to the downside. It's definitely a contrarian reversion to the mean type trade, but you did see a nice percentage gain there from 45 up to 52 and change. That's more than a 10% move. And then what you're seeing now is a nice tight consolidation over the last several sessions, perhaps getting Lulu prepared for a gap fill up here back to the high 50s. So I think this is one that you look around, you talk about the Peter Lynch style of investing and investing in what you know. I look around, every girl I know still loves Lululemon. They love the pants. They love all the apparel. And then Lululemon also has good sporting apparel for males as well, and I think that'll become increasingly popular. So just looking around, I think that Lulu still has a strong story. I know growth is slowing, but I think it still has growth potential, and I think you could see this one fill a gap. And then just a few names from off the charts, offhand, that have been performing pretty well. Western Digital today, nice move after a little reversal candle yesterday. Now it's back above its short-term moving averages, looking good. Workday, we listed it despite the fact that it has earnings next week because we just really like this upper-level bull flag, and today you got a nice move. This is one that is probably not going to reach the swing target that we listed on off the charts prior to earnings. And if you're familiar with our methodologies, you know that we don't take stock into earnings. So we don't believe in taking stock into earnings. So this is one that will likely get removed from the newsletter prior to its earnings report, but you could get some really nice movement like we saw today into that report as it became a triple-digit stock. And SPWR is one that's sitting on the newsletter that hasn't really triggered yet. But what we're seeing is an upper-level inverse head and shoulders, upper-level channel, whatever you want to call it. You sort of have a left shoulder here, head, a little bit of a right shoulder, or you could just call it an upper-level channel, whatever you want to call it. But overall, I think the solar sector is showing commitment to the upside. It has some pullbacks here and there, and it has some volatile moves where it'll rally a large percentage one day and drop a large percentage another day, especially a name like SCTY and some other smaller names in the group. But overall, to me, SPWR is still holding up really well, above the 8-day moving average, above all the moving averages. Given a little bit more time to digest the recent rally that we saw last week, I think this one could get more upside. Just want to keep an eye on there. And then just a couple notable moves today. You saw Apple was weak. I, in general, think people focus too much on Apple's short-term movements. I think Apple, as a long-term investment, I think it is a good value here. I think right now they have their iPhones, they have their iPads, their core businesses, but they have, I think their biggest potential is to jump into the mobile payments e-commerce business, and I think they will do that in the future. They also have the potential for wearable devices and a larger phablet iPhone 6 that is being largely reported now, and then also stuff with the TV set-top box and things like that, or the TV set itself. But overall, obviously short-term weakness here, below all of its short-term moving averages. Could it get a little bit deeper of a pullback? Sure. The recent earnings report was weak, but it did fill the gap. But it's been fading since it filled that gap, and it's anyone's guess what the short-term movement is. In my opinion, this is such a heavily traded, such a heavily watched name that I don't think you have a ton of edge trading Apple in the short term. I really don't. I think if you're going to be involved with Apple, you have to do it on a longer-term swing basis and investing type basis, and in that regard, I think it's a very safe stock. I think it's a stock that has good earnings potential and growth potential going forward, and that's the way I think you should approach Apple if you're involved with it. But everybody has their own time frame and their own opinion on how to do things, and you got to go your own way sometimes and let things work out as they may. Netflix is another big cap tech stock, or high beta tech stock rather, that is holding up really nicely in my opinion. Holding above the 8-day moving average, which is what happens with really strong stocks. Has it come a long way? Yes. Psychologically, it's a little bit hard to buy Netflix after this massive move. I mean, you could have got it back when Carl Icahn got it below 100 here a couple of years ago. So it might be hard for people psychologically to buy it here after this really strong uptrend. Obviously, you see it on the monthly chart. You look at the monthly chart, that's just an astonishing move you see on Netflix. You don't generally see a stock make that big of a parabolic type move, give almost all of it back, and then rally and dramatically eclipse that price. But that's what we've seen with Netflix. Like I said, psychologically maybe a little hard to chase, but one that's basing really nicely and could get more upside. That'll about do it. It's a daily recap for today. I like to hopefully provide you a little bit different perspective on things than some of the other videos you see. And after a quiet day today, I think you'll continue to see great opportunity, great volatility in the market in 2014 going forward. I think there's a lot of emerging technologies. Biotech is emerging and becoming a lot more in focus than we've seen in the last few years, even though biotech stocks have been strong for a while, getting more attention. When people start slapping the term bubble on a sector, it can lead to additional volatility and additional opportunity on a short-term basis, but until it gets out of control, which I don't think we're there with biotechs yet. Social media sector, obviously, going to continue to be in focus, in my opinion, after that Facebook, WhatsApp deal, as people continue to sort through what the valuations, what the futures are for these social media stocks. I think it will continue to be intriguing. 3D printing stocks woke up a little bit over the past couple weeks after selling off sharply. They'll continue to be volatile. So if you're a short-term trader, no lack of volatility. And I think if you're a longer-term value-type investor, is it a little bit harder to find good value up here in the stock market after the huge move we've seen over the last several years and the huge move we saw in 2013? Of course, it's a little bit harder. You perhaps have to trim your expectations a little bit. But these stocks like Microsoft, like a Corning, I think there's a lot of great stocks, great value stocks that still have upside here in this market. So I wouldn't be scared off. I wouldn't stop committing money to the market. I think, like I said, you'll continue to see opportunity in 2014, and we'll be here trying to help you unearth relative strength and identify stocks on all time frames that you could potentially be involved in. This has been John Darcy, your editor-in-chief, here for the Daily Recap. We'll see you back here on Monday for the morning call.